Good evening, good evening, good evening. Hey, everybody. You can insert ads during transition period. Get out of there. I don't want to look at that. I don't want to look at that. Good evening, everybody. We are, as you can see, we done pulled up and we doing a throwback price action recap. Shout out everybody that's in the Discordia. Oh Lord, I see Robinson. What's up, Robinson? Shout out to everybody in the Discord, man. Shout out to everybody that happens to pull up on the tube. I made it public on the tube so anybody can join. Y'all in the Discord. I like for y'all to be in the Discord. So if you got questions or if you want to chop it up, you're in the Discord and you can just talk directly to me. I'm not really gonna be seeing the chat on. Well, I got the chat up over there, but it's on that side. God dog it. Hate when they do that.
Man, what do you want now, man?
It's on. Oh my God. I forgot to block Robinson. What's up, man? What's going on?
What's up, brother?
Hey, man, I don't want nothing, man. Hey, if you don't want to be here, man, all you got to do is just not be here. Yeah.
That's the most pull-up dude I've seen in my life.
So don't pull up then. hey, Robinson don't want to do it, so we ain't gonna do the live, man. Y'all think Robinson? We fun to. We fun.
Thank me for that.
We fun to call it quits.
I done saved you a whole night of gum flapping.
Robinson say he don't want. Robinson don't want to do it, so we go. Hey, we ain't doing that. I got my desktop audio turned down. There you go. Now it's turned up. I had turned up. Couldn't.
Look at you. Always after you went live.
Oh man, how the family doing, man? How the family doing?
Everybody good, man. You know, everybody getting grown, and 2 out of 3 out the house now. So it's almost like we empty nesters.
Oh, hey man, you getting there, man. I still got a little ways before I be an empty nester, but I don't care. So I act like I'm an empty nester now. I pretend like I don't see them jokers.
Look, I don't see. The one that is here, I don't see her, but maybe 1 hour a day. So
What, you get a whole hour? Man, I don't.
Well, that's just coming and going, man. Cumulative.
Man, if I don't go in my kids' room, I do not see them.
You don't see them. I feel you.
I do not see them. I went in there the other day. I said, son, why you stay back here all day? This is where I like to be.
And you're like, all right.
All right, bro. Tell the family I said, hey, man.
Yeah, man. Tell Calandra and the boys what's up for me, man. We got to catch up one of these days, man.
Oh, yeah, for sure, man. For sure.
I want to see my sister at some point. So
man, get off my live, man, so I can do what I got to do, man.
Yeah. Go ahead and flack your gums, man.
All right, bro. Hey, man. I like to welcome y'all to a throwback. We doing a throwback. I was sitting there on the couch. I was like, look, man, me and my brother supposed to be, you know what I'm saying, studying tape. He down there shucking and jiving with his equipment, ain't got his stuff together. So I said, man, we gonna do an old school not tape reading, market review. Right? We're gonna do an old school market review. Now, whenever I don't care what you trade. I don't care if you trade ICT concepts. I don't care if you trade mannequin body parts. I don't care. It all starts with understanding what price is trying to do. Understanding what price is trying to do. Now, the thing that I like about ICT concepts is it's a set of I don't want to say conditions. It's a set of what's the word I'm looking for? It's not I don't want to say conditions. I don't want to say criteria. It's a set of I can't think of it now, but concepts. That's it. It's a set of concepts that work during a specific time, right? And time is the most important part of the concepts. So ICT as a whole is not just one concept. It's a bunch of different concepts that let you attack the market in any way that you, if you know all the ICT concepts, then you have a plethora. According to Michael, he got 81 different ways he can attack the market. He got 81 different PD arrays, right? So if you understand, and he hasn't taught all the concepts that he got, but if you understand everything he's taught, now you got so many different ways to attack the market, right? And time is the most important part. So I know the thing say intraday price action recap, but I also put in a dinner discussion, because if y'all throwback gang, y'all remember the dinner discussions when we had lunchtime lessons, we had dinner discussions, we had overnight price action, and all of them we talking about the price action. Draco, what's up, Big Draco? Big Draco in the building. Hear me? What's up, Big Draco? Hey, we talk about. You can't just talk about what price did without, well, I can't talk about what price did without turning it into some kind of teachable moment, right? Because it's all about what price trying to do. So time is the most important aspect when it comes to IC. Miss you too. I'm about to hit you up. I'll be like, I thought about you the other day. I was about to shoot you a text, but then I took a nap. But you time. So it don't matter if you're intraday trading, there's rules for intraday time. There's rules for swing trading time. There's rules for long positions time. Time is the most important thing when it comes to ICT concepts. So if the time ain't right, you don't even need to waste your time trying to sit there and look for a setup. So if you're a swing trader, right, and you're looking to go long, right, but you're coming up, you want to buy calls. You want to buy calls like 6 months to a year out, right? Or you just want to buy some shares to hold 6 months to a year out. Whatever you want to do, right? And you want to buy calls, but you're going into a bearish seasonality. Why are you looking for a setup? Because the time is not right, right? ICT teaches about quarterly shifts, right? Are you going into a quarterly shift that's going down? If you're going into a quarterly shift that's going down, you shouldn't be looking for a reason to buy calls. You see what I'm saying? Time is the most important thing about ICT concepts, right? And there's a plethora of things that you can know about intraday times. You got things like kill zone. If you a notey note taker, take out your pen. Time to get your crayons and your pencils. Hey, if you're a notey note taker, it's time to get your crayons and your pencils, right? So I'm a day trader, right? I'm an intraday trader. So now the rest of this gonna be talking about day trading stuff. I might keep talking about some swing trading stuff. So, but time, right? Let's make this bigger. Right? Time is the most important thing. Right? Time is the most important thing about the ICT concepts. Time is king. Right? Time is king. So, right, like we said, if you are a swing trader or a long position trader, right? What seasonality, if that's wrong, don't shoot me. Are we in? Right? What seasonality are we in? If you're a swing trader or a position trader, right? What seasonality are we in? Right? Are we in a open up? Hey, there you go. Right? What seasonality are we in? Are we in a time to be looking to buy or looking to sell? You're right. What seasonality are we in? What if we're in the beginning of the year, right? If we're in the beginning of the year and you see that seasonality wise, right, this time of the year tends to be flat. Or if we're going to the spring and this time of the year tends to go up, and then we're going into the summer, this time of the year tends to go down. We're going into like the September time frame, late August to like October. This time of the year tends to go down. Are we going to the end of the year where we getting like the Santa Claus rally, like in the fourth quarter? Is this going to be a bullish fourth quarter based off what price has been showing you? You need to know time, right? What seasonality are we in, right? What's the history on the quarters? You know what I'm saying? That we're going into understanding. Should I be trying to look for buys or sales based off of time? Time is the most important thing, right?
Okay, that says when seasonality.
That said what?
When instead of what?
Oh. Well, y'all know what I meant. Y'all know what I meant. Anyway, now, for day trading, right? For us day traders, right? And then you can also do that for what time of the month is it? Like, are we going into for the swing trading? What time of the month is it? Are we going into higher volatility news at the beginning of the month? Like non-farm payroll, you know what I'm saying? Are we going, is it time for like non-farm payroll at the beginning of the month? Are we coming up on a GDP, a preliminary GDP, like the first GDP when it be more volatile? Are we coming up on a FOMC meeting during this month? Are we coming up on options expirations? If it's regular option monthly expirations, or is it quarterly option expirations? What's coming up on time, right? What's coming up on time for that right there? That's something else I thought about. You know what I'm saying? For the swing traders, right? Time of month, right? Stuff like FOMC, right? Non-farm payroll, that's at the beginning of the month, every month. CPI, what's that, like the second week? I think CPI be like the second week of the month or something like that. You got FOMC. Is it the FOMC minutes or the FOMC meeting? If it's the rate announcement meeting, that's more volatility. Price in front of these big things, these big not conventions, but these big news events here, in front of these here, right? Price tends to range. Right? It tends to range because don't nobody want to position themselves in front of these big moves. So if you're coming in front of these big moves, right, you may not want to position yourself in front of these big moves. Or you may say, hey, I want to get in just before the big move, and I want to, you know what I'm saying, I'm a play the volatility. Right? And I want to get a big move off. You can use this time aspect to decide how I want to engage with the market. Because everybody all want to say, you don't want to do this, you don't want to do that, you got to figure out what works best for you as a trader. What works best for me as a trader? But that's time, right? So intraday time stuff, right? We got all kind of stuff, right? We have kill zones, right? We got kill zones, right? We got macro windows, right? We got macro windows. We got sessions, right? Different sessions got different characteristics. Okay? We got We got opening ranges, right? We got opening ranges, right? All kinds of aspect of time when it comes to the ICT concepts, right? When it comes to ICT, these are all aspects of time when it comes to the ICT concepts, right? This for the swingy swingers over here, right? I ain't got a lot to talk about on the swingy swingers because I do mostly day trading, and when it comes to swinging, right, all the ICT concepts work for swing trading, but it's just the setups are fewer and far in between. The setups are fewer and far in between, right? And seasonality apply to both of them, but I'm gonna get this out of the way. Don't really need that right now. Okay. Okay. So kill zones. Right. And when you look up, God dog it. When you look up ICT kill zones, right, depending on who talking about them, you might get 14 different things, right? You might get 14 different things. So, Asian. And all this is Eastern Standard Time, right? It depends. It's gonna depend on who you asking. Actually, I think you can do this for 7. You can do that for 7 also. I think ICT say 7 on this. I always say 8 to 12 because that's when the Asians start trading. But I think it's like 7 to 12, right? So I'm just gonna put 7 to 12. Don't quote me on that right there. I don't trade the Asian, but I think it's 7 to 12. Right? I think it's 7 to 12. I always say 8 to 12 because the Asian starts at 8. Based off of what we looked up, it starts at 8 o'clock. London. All right, you got 1:30 a.m. to 5 a.m. Right? 1:30 a.m. to 5 a.m. And then you got New York. You got New York morning and New York afternoon. So we're gonna go New York AM. I do 8:30, but it's actually 7:30 to 12 or 11, depending on how you want to look at it, right? It's either 12 or 11 because the London close go up until like 11:30. All right. So we'll just go. I don't know what I just hit. What did I hit something on my keyboard and changed something. How do I get out of this full screen? What in the haberdashery? How do I get out of this full screen? There it is. Okay. I don't know what I hit just now. What did I hit? Oh, I hit the F11 key. Okay. All right. So I'm just going to do the 12. All right. I'm just going to do the 12. I don't trade up to 12. All right. And then New York P. You got lunch. All right. Lunch is from 12 p.m. to 1:30 p.m. And then New York PM. New York PM is 1:30 p.m. Target to 4 p.m. Right. Right. These are your kill zones. Okay. All right. These are your kill zones here. Now, inside the kill zones, right, we have, well, no, let's do like this right here. Sessions. Asian is from 7 until, I think it's like 2 a.m. Is it 2 a.m.? Let's check it. Now, I can check that. I can check that. Time is, right? So we got Tokyo and Columbus, right? And then dog it, come here. So we got time over there, and then get out of here. And then we go over here, and we're gonna go Asian stock market hours. Asian stock market hours. Okay, that ain't what I want you to do. God dog it. Oh my God. I'm getting frustrated. All right, so Japan, Tokyo stock market from 9 to 3. Right, so from 9 to 3. So 9 a.m., that's 8 p.m. to 3 p.m., that's 3 p.m., that's 1 a.m. Right, so 9 a.m. to 3 p.m. is 8 p.m. to 2 a.m. What did I put on the thing? That boy good. 2 a.m. Right, so the Asian is from 9 to 2. So now let's go to London. Nope, that ain't what I want. Let's go to London, UK. London, UK. All right, we're gonna use London, United Kingdom. Compare times. Okay, so the London. All right. So the London stock market hours. Okay, so the London stock market trading hours, world's major stock market. London is from 8 to 4:30. All right, it says London is from 8. I just saw it there. It said 8 to 4:30 right here. The time says London Stock Exchange trading hours is from 8 to 16:30. So we come at 8 o'clock right here. It's 3 a.m. for us. And then 4:30, would be 11:30 because 4 o'clock is 11. So it's from 3 o'clock to 11:30. Right? Remember I told y'all the London close was like around 11:30? Right? And this right here, that was 8. Okay. And then this right here was 3 a.m. to 11:30 a.m. Then in New York is from 9:30 to 4 p.m. Right? Okay. I don't care about the Asian lunch and the London lunch. That's why I only got the New York lunch over here. So now you got sessions. Inside sessions, you have kill zones, right? Now another thing you have inside of the kill zones are macro windows, right? Now, I ain't gonna act like I know all the macro windows. I got certain macro windows that I know for a fact to be macro windows. If you listen to most people on Al Gore's internet, they say that during the kill zones, every hour during the kill zones got a macro from 10 minutes before the hour to 10 minutes after the hour. Like the 9:50 to the 10:10 macro, they say there's a macro for every hour that's inside of the kill zones. I don't know if that's true. It could be true because I know for a fact Michael talking about some different kill zones, like during the London and during the New York, and it being like at 10 minutes before the hour, right? So, right. So during the macros, that's my daughter. Y'all hold on for a second. That's my daughter calling me. Let me see what she talk about. Yes, my dear.
I just wanted to see what you was doing.
On live, I'm trying to figure out how I don't know how to mute this thing. Oh, there. All right, I'm back. Can everybody hear me? Y'all hear me in Discord?
Yeah.
All right, and then I see the mic jumping over there. Okay, so, so during the Asian, right? We're just gonna take the the theory of the 10 minutes 10 minutes at the 10 minutes before and after the hour, right? Meaning like from 8:50 to 9:10, right? That's what we gonna just take for the Asian. Same thing for the London, right? Same thing for the London. It's getting real crowded up right here. And then same thing for the New York, but it's like some other stuff for the New York that I'm gonna add in there. Right, so you got the 950 to 1010 that everybody know. You know, so 950 to 1010, 1150 to 1050 to 1110, 1150 to 1210. But then you also got 315. You got 315 to 345. That's in the PM. Right. That's in the PM. These over here are the AM. It'd probably be easy if I was doing like the 24-hour time. Right, 315 to 345. Right, this is the last hour. During the last hour, you got some additional macros. So 315 to 345. That's the last hour macro. Then you got the market on close macro. Right, you got the market on close macro, which is from 345. It's from 345 to 4 o'clock. Right, 345 to 4 o'clock. That's the market on close macro, MOC. Right, and then you got the settlement macro that everybody know is from 350 to 4 o'clock. Everybody know about the settlement macro. Right, that's the settlement macro. Right, so these are the different macros. Right, these macros right here, I know 100% for sure. Right, during the London session, I've seen Michael talk about the 250 to 310 macro, the 350 to 410 macro. I've seen him talk about these macros in there at the beginning of the hour. So I just take that as, okay, yes, every hour has a 20-minute macro before the beginning of the hour and after the start of the hour. At the end of this hour and the start of that hour, right? So cause when I see it happen here and I see it happen here, then I'm just gonna put it to that one right there too. Right? Now, we got opening ranges. Right? You have opening ranges. So at the start of something, right, you got a 30-minute opening range. Right? So right, opening range, right? 30 minutes. Minutes. I'm just gonna say thing. Right? First 30 minutes of the thing. Like, what do you mean, Tim? Okay, so, right? So you got your session, right? So if you're looking at a session, right? It's going to be the first 30 minutes of the session. So when the session starts, at, what is it, 8 o'clock? What time the session start? What time did we say? 8 p.m. Okay, so if it start at 8 p.m., then you'll be looking at from 8 to 8:30. Right? If the London start at 3 a.m., right? London start at 3 a.m. You'll look at the opening range for the London from 3 to 3:30. Right? The New York start at 9:30 a.m. So you're looking from 9:30 to 10 a.m. Right? These are your opening ranges. Right? These are your opening ranges. Right? And then, right, you go into a new day. That's why I put thing, right? That's why I put thing. And we're going to put day right here, because when you go into a new day via, from what the algorithm look at, is from 12 a.m. to 12:30 a.m. It's a new day, right? Going into the new day. So you got, because the futures trade from 6 p.m. to 5 p.m. So it starts the evening before, but the algorithm watches price from 12 a.m. to 11:59. That's the day, right? So when 12 a.m. hit, that's a new day for the algorithm, right? That's a new day for the algorithm. So time. It's other aspects of time that you can look at. You can look at the first of things. What's the first imbalance of this session? What's the first imbalance of this day? What's the first imbalance of this month? Right? What's the first new day opening gap of this month? What's the first new week opening gap of this month? What's the first? You can look at all of these first during these specific times, and all of these first, if price is trading near these first, right? You want to have a note of them, either on your little notepad, or have a folder on your trading view or whatever, where you can go back quickly and turn it back on and see all these things inside this folder. I don't keep all those on every day. It's called gaps. I don't keep them on every day. Whatever price is trading near, then I'll go in there and I'll say, okay, we trading near this one. Well, I need to find this one. We trading near that one. We're trading near this one. We're trading near this one. So I'll turn those on, because price is trading near those key levels, right? Time and price, right? So now when you understand the time, then you be like, okay, now what is price doing during these times? Okay. So time is king. Time is driving everything. Spent all that on time, because it's certain things about the session that you want to understand. What's the characteristics of the session? How does price move? Now that we understand the time, what is price doing? How does IPDA deliver price? IPDA deliver price. And what is this moving around back there? I see something moving around back there. Oh, there's an ad on that Time Is channel. Get out of here, Time Is channel. Got me tripping. Bye-bye. All right. So let me go over here. I don't feel like typing all this out. So let me go over here to my notes. Open up my my PowerPoint. Go to my notes. Y'all remember which one had that IPDA slide on it? Which one had that IPDA slide on it? Wait a minute, I think I just did this. Like recently. Power 3, it wasn't on Power 3. All right. Displacement. Was it on displacement? No, it wasn't on displacement. Who remember which one it was on? Somebody tell me which one was it on. Y'all remember which one it was on when it's got the the deliver price? God dog it. Which one was it on? ICT concepts. IPTA right there. Y'all should have said it's on IPTA, Tim. It's on IPTA. All right, right here.
I think it's on IPTA.
Appreciate you. All right. So IPTA deliver. This is how IPTA delivers price. Okay. And then the way IPTA deliver price, it has two. Looking at these 5 circles on here, right? IPTA is going to deliver price in 2 different ways. Right? It's going to deliver it in 2 different ways, depending on if we're in a trending market or if we're in a market that's reversing. Right? So if we're in a trending market, right, price will consolidate, it'll expand, it'll retrace, and then it'll deliver to a destination. Right? So if you're in a trending, meaning, right, you're going to consolidate, you're going to take out external liquidity, you're going to retrace back to internal liquidity, and then you're going to deliver back to external liquidity, right? Consolidate, expand, retrace, deliver, right? If you're in a market that's reversing, right, it's going to consolidate, it's going to expand, it's going to reverse, then it's going to retrace, and it's going to deliver. Right? Because you're going to consolidate, you're going to take out external liquidity, right? You're going to turn back around and take out external liquidity on the opposite end, and then you're going to retrace back to internal liquidity and deliver in the other direction. So price is going to get delivered in 2 different ways when it comes to IPTA, right? That's how price moves. It's always going to move like that, right? So now that you understand how price moves, right? You understand that there's manipulation in the market, right? There's manipulation in the market in the form of what we call the power of 3 in the concepts, right? So when it comes to the power of 3, right, you got accumulation, you got manipulation, and you got distribution, right? So accumulation is the same thing as consolidation, but it's consolidation that's happening at a key point, right? You're at a key point in price where it's at a order block. It may be, more than likely it's going to be at an order block, right? Somewhere where it's accumulating more orders, more longs or shorts, right? And then you can have manipulation, meaning it goes in the opposite direction of where it really wants to go. That's going to be, if you get the manipulation, then you're going to be in the reversal type setup, meaning you're going to this liquidity and spinning around and going to that liquidity, right? And then you got distribution. What is distribution? Distribution is the delivery. When you get to a old high or old low, you're delivering price to that destination, and now you're offset in those positions, right? So this is how price moves. You understand? Okay, this how price move. Now I need to look at price at specific times of the day, and how can this happen? Now, you ain't gonna look for it and say, okay, I'm looking for accumulation, manipulation, and distribution every single hour. You're not. It can appear every single hour, right? But you're not looking for it every single hour. You're looking for the signatures where when you see, okay, prices in accumulation, it's in consolidation. You don't want to try to be trading inside the consolidation. You're looking for the institutional sponsorship, right? I ain't gonna get into all of that, but you're looking for the institutional sponsorship when price starts to move. When price starts, you're following the money. When price starts to move, you say, hey, price moving. So I'm not chasing it. I'm going to wait for it to play out. We got our consolidation. We got our expansion. Now I'm looking for signatures. Are we just reversing? We just retracing to deliver, or are we reversing then retracing to deliver, right? And you know all of that by studying what the signatures are during key times. You can consolidate in the Asian, right? You can consolidate in the Asian, right? Expand in the London, retrace in the New York morning, and then deliver in the New York afternoon. Or you can expand in the Asian, retrace in the London, deliver in the New York morning, and then start consolidating in the New York PM after you deliver. It can happen at any time over the spectrum of the day. It doesn't have to happen every session. But when you know how to go in there and look at the price and say, okay, I see these clues, we're in a consolidation. Okay, I see these clues. We have had expansion, right? What do you look for when you get expansion, right? When you get expansion, expansion is paired with order blocks. So when you get expansion, you're looking at price to see where did price leave this order block? Did it leave one order block all the way at the bottom? Did it leave multiple order blocks on its way up? Right? So if it left multiple order blocks, then you say, okay, we should get a reaction off of these order blocks. I'm not trying to wait till it go all the way back to the last order block or all the way back up to the last order block up there. We left multiple order blocks. I should see a reaction off these order blocks in between here because the order block job is to block price, right? So if you see an order block and then you see price gets to a high or low and starts to consolidate, right? If it starts to trade back toward that other order block, you can say, hey, we're expanding away. We left an order block there. There's an order block down there. We probably gonna go to that order block right there. And you can make your decision. I want to trade from this order block to that order block, or I want to wait till it gets down here because I think price is going all the way up there. So when it gets back down here in a discount, I'm going to buy down here on this imbalance, on that fair value. You have the opportunity to look at the clues that price is leaving during a certain time, right? But Tim, if it can span across all of the different, and then retracements are paired with gaps, right? When you're retracing, you're looking to retrace to an imbalance, some type of gap. Yep, yeah, that's right, little Avery. And you're looking for some kind of gap, right? You got reversals. Reversals are paired with liquidity pools that's above highs and lows. When you take out liquidity, you're looking for how price, are we hitting it and rejecting it, right? If we hitting it and rejecting it, that's a sign that we probably gonna reverse, right? If we hitting it and rejecting hard, we might be reversed. So if you reverse at a liquidity pool, now your target is the liquidity pool in the other direction. Reversals are paired with liquidity pools. Now that we got that. Oh, and consolidation is equilibrium, right? So when you see price consolidating, you be like, okay, this is the range we're in. This is the equilibrium of it. I want to get in here and trade this consolidation. So now I see them at the high of the range. I'm going to trade it back down to equilibrium. Or you can wait to say, okay, I'm waiting to hit equilibrium and I might buy it back to the top or short it to the bottom. Whatever. You can use that if you want to trade in that little tight range. Okay. Yes.
Retracement is paired with which one?
Imbalances like gaps, liquidity voids. You know what I'm saying? Like any imbalance in price. You good?
Yeah, I got it.
All right. I went on. The people, is anybody on YouTube? If you on YouTube, when people talk in the Discord, can y'all hear them? Like put a 1 in the chat if you can hear the people when they talk in Discord. Somebody say something in Discord for me. Don't all rush and do it now.
Good evening.
Oh, go ahead.
Okay, she got a 1. Kim put a 1 so they can hear y'all when y'all talk. Okay. All right. Appreciate that, Kim. What was I saying? Oh, Tim, if it can go across all the different sessions, how are we supposed to know when to use it? We got kill zones, we got opening ranges, we got macro windows, right? So what do you use the opening range for? If you just had to guess, right? If the what's the significance of an opening range? What will you use this opening range to help you with? Somebody in the gang unmute and tell me. Somebody Michelle says she can't hear. Well, F Max said 1. So y'all can't hear the people in Discord. Somebody.
I can.
You can? Okay.
Mm-hmm.
Michelle, you might have a cheap cell phone, family. They said they can hear. Is it good? Is it loud? Is the Discord loud when the people talk? I mean, can you hear them well? Should I say?
Yeah. Yeah, clear. Yeah.
Yeah, Deborah says she can hear them clear. Michelle, what's happening? You got what you on an iPhone 1? You on an iPhone 1 or a Nokia Flip? What you on? And then Michelle, you answer like 5 years later, so you must not be like on the live. You must be like a little bit behind. How far behind? Michelle, do me a favor. How far behind are you? Right? I'm if you look at my time right here, right? If you look at my time, you probably ain't got your chart open, so I ain't gonna worry about it. Forget it. I'm moving on, right? Somebody unmute. I'm still waiting on y'all to unmute. That's why I'm just running my mouth. Somebody unmute and tell me, what do you think you can use the opening range for? What's the significance of knowing the time of the opening range? What can you use this for? Right? What can it help you? Go ahead.
It gives you direction of where you think the market is going to go.
There you go. It lets you sit down and watch the market to see what the market wants to do during this move on is fine. It lets you sit down and watch the market to see what does the market want to do during this time. It gives you like a feel for what the market got going on during this opening range, right? The opening range might, like a lot of times in the opening range, we get what? What do we get a lot of times in the opening range? What do they hit us with a lot of times in the opening range? Can somebody tell me?
Judas swing?
A Judas swing, right? A lot of times we get hit with a Judas during the opening range, right? So we sit there during this opening range and see if the Judas swing plays out. And then if the Judas swing plays out, now, if the Judas swing plays out, right? Let's do this right here, right? So if just say this is our opening range right here, and then we get the Judas swing, right? Right? We get the Judas swing here. Now, after we get our Judas swing, if price does this, what does that tell us? Don't get scared. Unmute. I want to hear Sherwin say, "That's my baby." I saw you unmute. Don't unmute and then mute back now.
Yeah, it lets us know that we're going higher.
But since we had a Judas swing that showed us we going lower, if it does this right here, then what does that signify? That there may be what?
What, a shift in
So if we get this Judas swing right here, what is that Judas swing telling us? That price wants to do what?
It wants to go the opposite direction.
You know what I'm saying? We come here, we go up, and we drop. So we got the Judas swing.
Oh,
so
we get some liquidity below.
That we want to go below, right? Okay. Now, if price does this, what does that mean? There may be what happening right now. Somebody help Deborah out. Don't leave Deborah out here flapping, gang.
Is it manipulation?
Manipulation. There you go, Kashaya pulling up with the assistants. See, Deborah forgot to say I want to phone a friend.
No problem.
Right? So we got our Judas swing, and so now we see our Judas swing. So now we're anticipating price to do what? Come here, retrace back, and then go down. Right? So during the opening range, right? If we get a Judas swing like this, and we're still in the opening range now, and price comes back and does that, we can say, whoa, wait a minute. I'm chilling. Michelle, you and I stay popped up. Go into the real voice. I mean the regular voice. Don't go in I stay popped up. I'm in the regular voice. So that shows you, wait a minute. It's some manipulation because algorithmically, once we take out this liquidity and take out that liquidity, right, that's the Judas swing. So we should accumulate, expand, reverse, retrace, then deliver. You see what I'm saying? But if we accumulate, expand, reverse, how does trending markets move, right? External to internal, external to internal, external to internal. When you're ready to reverse, external to internal, external to internal, external to internal. You see what I'm saying? So if we just go in here and we taking out by, then you can say, okay, all right, look like we might be in a ranging date. Right? And then we start doing this right here. And then finally we start to move. Okay, we was just in a little manipulation. We probably was in front of some news or waiting for something. You can look at these things and say, okay, I see what you're doing here. Will somebody take a loss here if they trade, you know what I'm saying, before this manipulating time is over? Yes, taking losses is a part of trading. But if this happens, right, and it's now you're in a time frame where price should continue to move algorithmically, right? Then you have stuff to show you, hey, I may be on the wrong side of the trade. What can that be, right? So let's just say you retrace back to a fair value gap here and you expect the price to go down, right? So if price keeps come up, disrespect that fair value gap, right? There's going to be an order block over here. There's going to be a breaker over there. So if you disrespect the fair value gap, disrespect the order block, disrespect the breaker, how many PD arrays is that? That's 3. Michael teaches if 3 PD arrays get disrespected, you're probably on the wrong side of the trade. So you don't have to take the loss all the way up there. Right? You ain't got to take the loss all the way up there. You can put your stop in a safe place over here where it should be safe from getting violated by 3 PD arrays. And then if you get taken out, you can take a smaller loss and then you'll know, okay, the manipulation is going on. Let me wait until I get clarification that the manipulation is over, or let me just get on the sideline. You can engage the market educatedly. You won't be able to run from losses, but if you engage, if you encounter a loss, then you can understand, hey, why am I losing right now? Because of this. You're not just saying, oh man, I got stopped out and I don't know why. If you understand all the concepts, you can understand this is why I got stopped out. This is why it made it. This is why I was successful. I was trading during the right times. Right? It was moving algorithmically, right? What's the significance of the macro windows, right? During the macro windows, you're expecting price to start to spool, right? You're expecting price to start to spool. Will it spool with every macro time? No, it will not. But if you know where you are in if you are, let's do this. Somebody unmute right now. Whoever unmute gonna be the person to answer. Somebody unmute right now. I want to see somebody unmute. And it's gonna be you that answer the question. Don't get scared. Somebody okay, Deborah. Look at Deborah pulling up. But Deborah, you did it last time. Somebody else besides Deborah. Somebody Avery. Okay, Avery. All right. Yeah. If we coming into the 9:30 session, right? We come to the 9:30 session. And we are getting ready to go into the 950 to 1010 macro, right? And price at 9:30 price. This is price at, okay, we're going to come here, right? We're trading here, come there. And at 9:30, right? This is 9:30 right here. Well, I'm scribbling there. At 9:30, price does this there, right? And then at 9:50, right? Price start doing this right here, right? Price start doing that right there. Now, where are we in price as far as like consolidation, expansion, reversal? Where is price when you come into the 9:50 window up here? What is it doing right now?
Consolidating.
It's consolidating right there, right? So now we're in the 9:50 to 10:10 window, right? And let's just say right now it's 9. Oh, okay. So price has consolidated here. It's dropped down and then it pushed up here. So in the essence of how IPTA deliver prices, where are we right now? What are we waiting for at this point? If we consolidated there, dropped there, came up here, and now we just consolidating up here. So what is this here? This is what?
Manipulation.
Yeah, down here. That's the manipulation down there. Good. We consolidated here. We manipulated there. And we're going up. So once we get up to this area right there, what are we waiting for? Right?
Distribution.
We're waiting for distribution, right? So we wait for distribution. And we're going to say our high is right here. Right? We want to distribute above this high right there. Right? Now, if we're looking for distribution above this high right here, and you haven't had an opportunity, have you had an opportunity to participate in this move yet?
No.
You ain't had an opportunity to participate in the move, right? So, we've taken off. We have a fair value gap here. We got our area of where we want to distribute up there, offset our positions, right? So, if we get here, from at 9:50 and 10:10, right? Are we looking for a price to attack the imbalance so we can get involved in the move, or are we looking for price to spool up here and take out that high?
We wanted to see it go down to go up.
Yes, you're looking for price to come here to give you an opportunity to go there. Because you got to think like the smart money, right? You got to think like the smart money. Now, does price have to come there? No, it doesn't. So if price starts to consolidate here and we break down below this consolidation and then we reverse back up, what does that tell you? Right? Where you need to be trying to get in. You need to keep waiting here, or do you need to try to get in here?
Oh, no, I'm going to wait. I learned that. I'm going to wait.
All right, so yeah, you wait until it come back down there. So he said, I'm waiting. That's smart. He waiting before it come down here because right now we're in a premium, right? We're in a premium. So you want to buy in the discount. So if price comes here below this low and then spools toward that high, right? You can just wait for price later to come back down to the discount, right? And then go up, because in the scheme of the day, right, this is only the first 20 minutes of the day. So this is, you know what I'm saying? If you, in the scheme of the day, this is the first 20 minutes of the day. So you don't have to chase price right here to try to get that little move there, right? You can let it go up there. If it take out that buy side, that's letting you know price is showing me that it wants to continue up. If it leaves an imbalance down here, it's an imbalance down here. There's an order block down here. There's a breaker down here, right? Price can come up here. Now what you have, you got internal liquidity there in the form of a low. You got internal liquidity here in the form of a fair value gap, so you can wait for price to take out this liquidity and then trade back down into this area there to get long. So it's up to you. How do you want to trade, right? There's nothing wrong if you want to take a scalp from here to there. There's nothing wrong with that. There's nothing wrong if you want to wait for price to let you know that, yes, it does want to go higher, then retrace back into the range. But when you understand the rules of the concepts, you can attack the market educatedly, right? I appreciate you, Avery, for pulling up with the hard-hitting answer. Now that I done...
Hey, Tim.
Yes.
I have a question on that one you just went over.
Uh-huh. Oh, my goodness.
So if it went up first, you erase... Yeah. Put it back. So if it went up first, and then... So if it went up and it takes out that high there that you drew, I assume that was Picasso. Why would you then buy if it retraced in anticipation of it going back up there? Because didn't it already do what it was going to do?
No, this is just a high that we're in the first, like this right here, this from here to there, this is only the first 20 minutes of the day, right?
Right.
So you're just coming back to a high. That could be the London high. That could be anything. You know what I'm saying? This could be the London high. That could be, you know what I'm saying, any other high. But this is time coming in, and this is 9:30 right here. You see what I'm saying? Okay. So at 9:30, we consolidated before 9:30, right? We got the Judas swing like that right there, and then we started to consolidate here, right? We started to consolidate there. We could have been consolidating above a old high right there. It could have been a high there. Then we came over here and we started consolidating right here at this high. You see what I'm saying? And then if it drops here and doesn't come to that area, right, and it hits that, then when it comes back down to this area, then you can get picked up there, because we're looking at, you see, like you're looking at it in the sense of intraday trading. So if you're intraday trading, right, this time frame right here, this could be a 5-minute time frame. This could be a 1-minute time frame, right? And then so on this 5-minute time frame, you got a fair value gap there that you didn't come back down to. But on the hourly, right, once you go up and do all this, now it may be an hourly fair value gap sitting right here in the same spot that you're going to retrace back down to. But on this time frame, you're coming through, taking out that liquidity, coming down, going into that liquidity. You understand what I'm saying? Like the higher time frame has built out more structure, and that's why once you take this high and it's showing you that it wants to keep going up, by taking that high, you're going to external liquidity and you're looking for it to come back to internal liquidity.
Okay. Yeah, I see. I forgot that because you're talking about from like 9:50 to 10:10.
Yeah.
So obviously you would be on a low.
Yeah. This is
frame
the
when you're looking at that. So that's not an ultimate high. It's an intermediate.
And it could even be, it could be like a short-term high, intermediate high. If this is an intermediate term high, right, you're taking out an intermediate term high. So that says, I want to keep going up. But when we take out an intermediate term high, we anticipate a deeper retracement, right? We anticipate price to trade, because long you haven't taken out an intermediate term high or low, right, the short-term high and lows typically are safe, right? So when you take out a short-term high, right, this low is safe, right? You take out another short-term high, typically this low is safe. But if you take out an intermediate term high, then that low, they can be in the crosshairs. Because when you take out that intermediate term high, you know what I'm saying, you anticipate a deeper retracement, right? And if you take out an intermediate term high and go back and take out another intermediate term low, then, you know what I'm saying, now you know we in full reversal mode. But you know, talk about intermediate term highs and intermediate term lows that get people to want to count the swing highs and swing lows, and now you're doing too much, right? So just understand where price going. But you get what I'm saying. That's why I kept stressing this is only the first 20 minutes of the day.
Yep, I got it. Thanks.
All right. Now that I done ran my mouth thoroughly, let's go on. Do anybody want a screenshot of all this gobbledygook that I got on the screen right here?
Yes, please.
Sam B. Let me see what somebody said. Right, let me see if I can separate, make it make sense. All right. Yeah, so that look decent. That's readable right there. Try to get it where it's readable. I don't like how them. Y'all know how anal I be. I be going crazy with the anal tendencies. All right. Okay. All right. I dropped it in the Discord. What's good, y'all? Is there a link to ask questions? Ask Tim a question. Just type it in the chat, Sam. Just type it in the chat, and I'll look at it. Just type it in the chat on the what's the name? The people that's talking are in the Discord, but if you got a question, just type it in the chat. All right. Now that I did all that mouth running or gum flapping, as Robinson say, let's go revisit price from today. Do y'all still want to revisit price, or y'all good? Y'all good? Do y'all want to still recap price, or y'all good on the
Yes, please.
All right. How did they get way back down? How did they get way back down? Okay, it's straight now. Okay, it's straight now. Yeah, it's on like a couple seconds behind. All right. Okay, so let's we're gonna go. We're gonna since. Let me see what gaps did I have on. I had on today, new week opening gap. I think I had on like the 5th, the 9th, the 12th. Yeah, that's all I had on as far as new week and new day opening gaps. Let me see if we got up to anything else that I didn't have on. So price came all the way up to here. There's one that we had from the 13th. I don't even have the 13th in here. So we did get up to one on the 13th right there. Copy that. I don't even have that one on my chart no more. That one got taken off a while back. All right. That one got taken off a while back. We made it up to there. And then we don't have any others in this area right here. We do have some way back here. Right? We have some way back there, as you see. Right between this day right here. Right there. Right? See our prices. Respecting that. That's a new day opening gap from all the way back in April, right? new day opening gap, and then let's look at it to see if it's a difference in the volume imbalance. Right, no, volume imbalance is the same size as the new day opening gap. Right, so that's a volume imbalance right there / new day opening gap from way back in April. See how price went up there? Look what price did on that daily candle. Right, closed right there at consequent encroachment of that new day opening gap right there. Right there, consequent encroachment. Right there. Right, so these things be good. You know what I'm saying? If price trading back in that vicinity, right, these things be good. 412. If they be trading that vicinity, you know what I'm saying? These things still like Michael say, they never get crusty. They never lose their power. They never lose their power. They always good. Oh, I already had 8, 9 in there. I just didn't have it turned on. Wait a minute. No, that's not 8, 9. I copied that. That's 8, 13. Okay. That's 8, 13. All right. I didn't have the 8, 13 turned on. And I didn't have that turned on. But since price went there, we're going to leave it on. All I had was the inversion fair value gap. The weekly inversion fair value gap, right? For those who wasn't on the tape reading session with us this morning, this with my TDA, this is the weekly inversion fair value gap right there. We had a BISI from the week of August 12th that we created an inversion fair value gap from last week with the week of September the 3rd. So we got an inversion fair value gap. I didn't want to leave the whole block on there and gunk up my Hey, why my thing look blurry? Is it blurry on YouTube? That thing say the quality. Oh, that's in YouTube Studio. That thing say the quality playing at 144p. I really hope it ain't playing at 144p for y'all. I really hope that's playing better for y'all. I want to get your opinion on what I'm seeing so far with price action. On September 3rd, we took the previous month's high and quickly expanded downward. If you go from the monthly chart to the daily, price looked like it's on the way to retrace into the range from September 3rd to September 6th. If you throw the fibs on that range. All right, Sam, when we did back when we was doing our there's a bearish order block. When we did our monthly analysis, right? When we did our analysis at the end of August, I'm gonna knock this off right here, right? So when we did our analysis at the end of August, right? Okay, you can stop typing, Sam, so because I'm just gonna run down what I went through with the price with the gang, and then you can bounce that off of your notes, right? So at the end of August, we had this is where we was at. So me and the gang broke it down. We said we on the monthly time frame, we came down here to this monthly order block right there, right? The overall the monthly was bullish. This the NQ. This the NQ what I'm talking about now. So if you ain't talking about the NQ, then apply the same stuff I'm talking about to whatever you're looking at, right? So on the monthly, it was bullish, right? And then we had a retracement back down into the monthly order block, right? Rejected off of it. Nice respect of the order block, right? So now that when we rejected off of that monthly, let me go back here. Let me hide all this stuff over here. Right? So the monthly, we rejected off of that. So once we rejected off of that, the only thing we left below on the monthly as far as the imbalance is consequent encroachment of this wick, right? That's the only monthly imbalance we got. We got the monthly high, we got the monthly low of August, the monthly high, the monthly low of August, right? And the only thing we got is the consequent encroachment of the monthly wick. Okay, so that's the only downside PD array. That's the only imbalance that we have, and it's in the discount of the range, because from the close of the month to the low, this is the discount wick, right? And if you look at the entire month, right, this the entire month, so it's in the discount of the monthly range. So seeing that it's in the discount of the monthly range, right, if the monthly is bullish, right, that would give us, right, a target of up here. Okay, so if you're targeting up there, right, and you want an opportunity to participate in the move, where do you anticipate the market going, right? Going down here, right? This is the only imbalance there, coming down here to maybe this imbalance and maybe these equal lows, and then going back up, right? Being that we're going into bearish seasonality, right? Looking for a retracement at least to that, and hopefully taking out the equal lows to get rocket fuel to come back up and end the year with a nice Santa Claus rally, right? That's the thesis for the monthly, right? That's a thesis for the monthly, because we didn't take out sell side, right? We didn't take out sell side, so we haven't picked up any rocket fuel to come blow out these highs yet, right? We can come down here and engineer more liquidity to get back up there, but as of this point, we ain't take out sell side, so we ain't got no rocket fuel, so we're anticipating a retracement back down to there, right? Then we're going to the weekly, right? We're looking at the weekly, and we see on our weekly chart, right, we had a break in market structure to the downside there on the weekly. We had a break in market structure there on the weekly. Why? Because this low took out that high. This low took out that high. So when we trade back down below that low, that's a break in market structure, giving us a bearish breaker right there, right? This low took out that high. When we trade back down below that right there, giving us a bearish breaker right there, right? So we've come down on the weekly. We got a bearish break in market structure on the weekly. Did not take out the sell side. The same thing that the monthly did. We did not take out the sell side on the monthly, and we retraced back up into the range and could not get to that fair value gap, because this order block, this bearish order block right there, stopped price, right? It stopped price. We could not get there, right? We pushed up. We hit the order block, reject off. Then the next week, we couldn't get back to consequent encroachment of that wick, and we dropped down into the BISI and closed on top of it. Now, so the sale program is still intact on the weekly, right? The weekly is still in the sale program. This weekly has not broken back bullish. Okay, so you got your monthly, right? Your monthly was bearish, right? Your monthly was bearish, but we are anticipating a retracement. So if you're anticipating a retracement on the monthly, what do you want the weekly to be, right? You want the weekly to be bearish, right? The monthly was bullish. I said bearish, I'm sorry. The monthly was bullish, but we're anticipating a retracement. So if you're anticipating a retracement on the monthly, you want the weekly to be bearish, right? So your weekly is bearish. So that aligns with giving the monthly a retracement, right? So if the monthly, your draw is at minimum this consequent encroachment of that wick, and then you want to see it hit the sell side, right? So you're looking for the weekly to be bearish. All right. Go down to the daily, right? On the daily time frame. Okay, this is what I was talking about when I was like, you got to be careful what time frame you're on, right? Because on the daily, right, we've come down, but when we take out that high right there, right, that's giving us a bullish break-in market structure on the daily. Okay, just because we got a bullish break-in market structure on the daily doesn't mean we're going to go up. Matter of fact, somebody tapped into the live and was like, hey, the daily has broken bullish, and so should I be looking to buy calls to go up there? I said, hold. I wouldn't buy right here, right? And I was like, I wouldn't buy right here because when we look at where we are in the range, we're just at equilibrium in a slight premium, right? So if you're at equilibrium and a slight premium, this is a place to be selling, right? Especially if your weekly is bearish. Just because you got a bullish break in market structure on the daily doesn't override what the weekly is doing, right? If you're looking for, a reversal, you want this lower time frame to be in line with this higher time frame, right? So for it to come from being bearish to bullish, this bullish break in market structure on the daily doesn't override this bearish of the weekly. So still, you don't want to be trying to get long here because you're just right here at fair value and a slight premium, and we selling the premiums and we buying the discounts, right? So looking at all of them time frames now, you say, okay, this is our draw at the minimum, and this is what we want to see hit over this next month, right? And then when let's just go to the end of time. Let's go back to the weekly, right? So then we go to the end of time now, and we're gonna now we're gonna take off this week, right? So now as you see last week, right? Let's go back to the monthly, right? And as you see, this is our monthly. This was our consequent encroachment of that wick. And then as you see last week, right, we came down to consequent encroachment of that wick. We closed below consequent encroachment of the wick on the monthly so far, and we created an inversion fair value gap on the weekly, right? So we've already hit the first draw that we was looking at. Then the second draw, you know what I'm saying, is down here, right? So now that we've gotten here at that first draw, now you want to look at what has price left in the wake for the narrative, okay? So this is only the first week of September, so you don't have an imbalance yet, right? You don't have an imbalance yet. The only thing we have right now is we've traded below the opening price of this, so now we got a potential order block right here. But on the weekly basis, we won't see if this being used as a ICT order block on the weekly basis until we trade away from it on the weekly and then come back to it. But since we have this now on the lower time frames like the daily, we can see how the lower time frames reacts to this order block on the lower time frame. And you can check that by, since we got this huge wick, I don't like to use the huge wick, so I'll go body to body, right? And then you see we got mean threshold right here of this, and that mean threshold is falling right in line with the consequent encroachment of that inversion fair value gap, right? So you got mean threshold of this order block falling in line with consequent encroachment of that inversion fair value gap. And then you have you can see how price on the daily time frame reacts to this potential bearish breaker, right? I mean bearish mitigation block, I'm sorry. You got a bearish mitigation block here, right? You can see how and again, you would need to trade away from it and come back to it to use it like on the weekly time frame. But on the daily time frame, since you traded down below these prices here, you traded down below there, right? We traded down below there. So now you can look on a daily time frame to see how it reacts to this daily mitigation block over there. But for me, I wouldn't even be really paying attention to the mitigation block part of it. I'll just be paying attention to this because we haven't traded away like the inversion fair value gap like I did right there, and then be looking at stuff on the daily time frame to see what the daily time frame has for us inside there, right? Looking at, you have a over here you got a breaker here, right? You got a bearish breaker right there on the daily time frame. You got a bearish order block right there. Again, that's that consequent encroachment. I mean, that mean threshold of that weekly order block right there inside that daily breaker, right? So those are all the different levels of confluence for price. Now that we've gotten to the first level, right? And then now that we've gotten to that first level, we're coming down into that first level of the PD array, right? You know what I'm saying? Price could come back up into this area here. You know what I'm saying? Maybe even take out that high, hit that order block, hit that mean threshold, whatever it want to hit. And then you see if it wants to continue, has the desire to continue down to the sell side based off the, you know, like the discount and premium PD arrays. You want to look at what's left in the wake, cause in the sense of this price move here, right? In the sense of this price move here, we went up and we came down into a slight discount right there, right? Came down into a slight discount. So now that we've come into a slight discount of that, right? We've come to equilibrium. We can anticipate, right? We can anticipate some form of retracement, right? What can we retrace back to? We got our breaker, like we said. We got a swing high right there. We got a bearish order block right there, right? We got the rest of this SIBI right there, right? We have an inversion fair value gap right there. We got, you know what I'm saying, multiple things. We got the inversion fair value gap on the weekly that we was looking at. We got multiple things above price in the premium that we can trade to look for resistance to continue pushing us down, right? And then we go back to where we are now. This is live price right now. And you see that we've come back up into the range, right? Came down to very close to the inversion fair value gap on the daily. We did come into the inversion fair value gap on the weekly. This is the inversion fair value gap on the daily, right? Came very close to it. Today, we created a SIBI today. So today we're adding onto the PD arrays. So now we didn't make it to the inversion fair value gap and we created a SIBI, right? On the weekly, we did make it to the weekly inversion fair value gap, right? I'm gonna make this one gray so we don't get confused when we get down there. Go back to the daily, right? So we made it to the weekly inversion fair value gap today, right? And we made it to the weekly. We created a daily SIBI right there. So, right, we failed to get to the daily inversion fair value gap. Now that we've opened up, we traded up into the SIBI and we pushed back down to this old new day opening gap from August 13th. And that's where we're at now, right? Traded up and we pushed back down. So you would just look at price to see, okay, we're still hovering around where, right? Where are we hovering around? We're close to equilibrium, right? We're close to equilibrium of the range, right? And can somebody tell me, right, a good reason why we're hovering? Let me move these brushes. I thought I moved the brush. Hope I ain't delete the wrong thing. All right. Okay. Can somebody tell me a good reason why, right? Looking at this range right here, right? We pushed back up and we traded back down just below equilibrium into there on Friday, and now today, right? Today's trading and then the trading that just started tonight, we're still in this area, right? So if we were to hang out in this area right here, right? Just say if we traded around, just traded up and just stayed right in this area right here. Can somebody tell me why are we staying right there? Right? Why would we be staying right there? What in the essence of time that we were talking about, right? What in the essence of time, let me give y'all a cheat sheet. Right? What in the essence of time would make us stay right there? Right? We're looking at daily candles now.
Wouldn't it be CPI and PPI that's coming out this week?
Yes. If you look at the calendar, we got CPI coming out on Wednesday. Right? This is the main one. PPI, yes, PPI is important too, but this right here, don't nobody want to put on a whole lot of nothing in front of this right here. So price will just chop you up and down and stay in a certain range, you know what I'm saying, in front of that CPI. Somebody tell me what I used to say about CPI and FOMC. Price do what? It make a move, then what? Price will make a move, and then what? Somebody unmute and say it. You got to say it just like I said. Somebody unmute. Deborah, I want you to unmute and say it. Price will make a move and then do what? Here to learn to share. You better unmute and say it if you're going to type it. Deborah, say it, Deborah. She done typed it out for you. When you say it, I want you to lean your head to the side too. Now she acting like her phone can't unmute. Michelle, help out. What I say? Price will make a move and then do what?
Slide to the right.
Slide to the right. Did you move your head? You better move your head. Slide to the right. So price made a move. Now it's coming into CPI, so we can anticipate it to slide to the right. And if it's sliding to the right, what is it doing? It's consolidating. Where does price usually consolidate? At equilibrium, at fair value. And where is it right now? Hanging out right there around equilibrium. Oh my goodness. It's somebody charging $19.95 for this on Al Gore's internet right now. Yes, time of the month. You're right, Sam. Time of the month. It's CPI time. We're coming up to CPI. I think CPI be like the second week of every month, if I ain't mistaken. Y'all go back and look at your economic calendars and fact check me on that. But I think it's the second week of every month. And I think non-farm payroll is like the first Friday. I don't know. Anyway, they come every month. Just like the bill collector. I'm so glad I ain't got to mess with the mortgage man no more. Now all I got to do is mess with the tax man every October. Tax man got his hand out every October. All right. Now back to what I was saying. We went through the TDA. We talked about the TDA. And so now let's look at where we are. We're just gonna look at 15-minute charts. We talked about our top-down analysis, what we had marked on the charts, what we were anticipating. Oh, I didn't go down to the 4-hour. We had a 4-hour SIBI. That was the last one that I marked out. This 15-minute SIBI right there, I put that on the chart because I was up during the London doing some trading on my phone, and I was anticipating price to draw up into that 15-minute SIBI because it was right there in confluence. This line right here, that's the low of that weekly inversion fair value gap. Remember when I said I didn't want to mark the whole weekly inversion fair value gap out and leave that big ugly box on there right here? I didn't want to mark the whole thing out and leave that box, so I just marked out the low of the weekly inversion fair value gap so I know if we trade it back up into it. Okay, so that's the top-down analysis. That's what we're looking at for price. Price opened up with like a 22-point gap up with the new day opening gap. 22.5 points gapped up with the new week opening gap. I'm sorry. If you don't know what the new week opening gap is, it's the difference between the closing price on Friday at 5 o'clock and the opening price on Sunday at 6 o'clock. The difference between that price is your new week opening gap. Every other day of the week, the difference between the 5 o'clock closing price and the 6 o'clock opening price is your new day opening gap. So price traded up into this 415 SIBI and then traded back down to the new day opening gap, right? If you understand how premium and discount, right? If you ever are in a range, right, and you have a bearish PD array and the discount of that range, right? If you got a bearish PD array like this SIBI right here, and it's in the discount of the range, meaning below the 50%, right? That's a low probability bearish PD array. Right now, there is opportunity to go ahead and scalp because see, we traded into it and we did trade back down below that low, right? So that would give you a move back to some sell side on a 1 minute time frame, but that's not something you're trying to short all the way back down here because that's in the discount of the move, right? That's low probability. So we traded up into that SIBI, right? Touched the wicks of this order block right here, traded up into the wicks of that order block. If y'all know how I mark out my order blocks, if we are overlapping with a imbalance, I mark out the wicks. If we're not overlapping with the imbalance, I mark out the bodies, right? So we traded up here, right? And we came into the wick of the order block right there, came into the wick of these down close candles there, and then traded back down to the new day opening gap. And then once we hit the new week opening gap, we displaced up, creating a BISI here at 7:15, right? Created a BISI at 7:15, and so for the 15-minute time frame, right? For the 15-minute time frame, this is the first imbalance that was created from the start of the evening, right? And so that's the first imbalance that was created from the start of the evening on the 15-minute time frame. We'll look at lower time frames to see if we got some before that, but we're just looking at the 15-minute for now, right? And then after trading back down, we got an institutional order flow entry drill on that 15-minute BISI right there, right? And if you look, we're down here, we're still down in the discount of this move here. So we're down in the discount, and so you have a buying opportunity here off this liquidity void / new week opening gap right there, right? Taking out that low up under the opening low, right? We're taking out that opening low, right? So this is like your initial sell side because this is moving into the 7 o'clock hour there. So you got your initial sell side right there. We take it out, push up, take out the initial buy side, right? So let's look at that, right? So we got here, this right here is the 7 o'clock candle right there, right? That's when 7 o'clock starts, right? So this is the 6 o'clock hour when we first start. So you got your opening range, 6 to 6:30. We just opened it up. The session just started. So that right there is the highest high. That's the initial high in the 6 o'clock hour, right? That's your initial high in the 6 o'clock hour. Do I got one that say initial? No, I don't. Right, that's your initial high in the 6 o'clock. Let me see if I got a line. Let's say initial. I think I do. All right. So I'll come here. Buy side initial. Boom. Right. Matter of fact, let's do this right here. I'm gonna go with 6 p.m. Right. So that's your initial buy side from the 6 p.m. candle. Right, and then this right here, that's the lowest low right there. So that's gonna be your initial sell side from the 6 p.m. Right, so okay, so you got your initial buy side, you got your initial sell side right there, and then you notice that we are in the discount of the last price leg right there. We're still in the discount of this move. We're below the 50% of that price leg right there. So what do? We look for reasons to buy in the discount, right? Price, we come here, right? We tap into the sell side and then we displace up, taking out the buy side, right? So if price goes up and price comes down, right? If it takes out external liquidity right there and then we go back up and take out external liquidity, what's that? That's a sign of a reversal, right? That's a sign of a reversal. So when we're all, what are we doing here? Like, are we in a, is this a tight range right there? Is that a tight defined range? Right, this candle here, it trades there, this candle there, 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 trades there, then this next candle trades there, and back up there, right? Is this right here, does that look like a defined range, right? Somebody say yes or put a 1 in the chat. Do this look like a defined range right there, right? A set range where price is not trying to break out of either side of it, right? Inside this, from that first, from 6 o'clock to the first, like, 15, 30 minutes of 7 o'clock, right? Does that look like a defined range to anybody? Right? Nobody saying nothing? Okay. All right, we ain't saying nothing. Yes, thank you. All right, I see that. Did I not share that picture? I'm sorry, y'all. I thought I put that picture in there a long time ago. I guess I didn't hit the enter button. I'm so sorry, y'all. So, right, once we take out that sell side right there, right, price pushes up and take out that buy side, right? So if we take out sell side and then immediately reverse and take out buy side, what is that? That's a sign of a reversal. So in this area here, we got what? We got accumulation, we got manipulation, right? And then we come up here, and then we got distribution right up there, right? Right up there. How do you know that that's the distribution? Because once we get above this high, right? Once we got above that high right there, right? We started to accumulate more positions right there. Got back above the high, started accumulating more positions right there, right? So there's an example of what it looks like in real price on the 15-minute time frame, right? And that played out over in this right here. We hit the high there. That's the 12 a.m. candle right there. So the entire Asian kill zone, right? Asian kill zone start at 7, right? So we had the accumulation just before the Asian kill zone, right? So we got accumulation here, right? Coming to the Asian kill zone at 7 o'clock, we got the manipulation during the Asian kill zone. And then throughout the Asian kill zone, we got the distribution, right? And we went above it on the 12 a.m. candle right there. Got above these highs over here at this new day opening gap and started engineering more liquidity right there above these highs. It's sitting there offsetting positions that it got long positions here, accumulated more long positions there, right? Traded back down into that order block right there below those lows, accumulated more long positions there, right? Picked up some more long positions there, right? Picked up a few long positions here, you know what I'm saying? When we got that down close candle there, picked up some more long positions there, right? Picked up a few more here, and then started the offset distribution right there. Okay. That's what it looks like in real price on the 15-minute time frame. All right, let's jump over to the New York time frame on the 15-minute. We're gonna spend a whole lot of time in the London because by this time we were getting to the chop suey. Like, price used the Asian and the London to get us back up around equilibrium, and then the New York was just chop slop. Shout out D asked about, hey Tim, is this since we've come here, right? What's up, Rhonda? Welcome back. How was your trip? Welcome back. Pull up in the Discord and tell me how your trip was. We in the voice. She was asking, she was like, hey Tim, on the hourly, would that be accumulation, manipulation, you know what I'm saying, like this? And I was like, we don't know yet, right? Because we were still coming down here. We had came here, went up, and we was coming down here. We hadn't taken out this low yet, right? And I was like, if we get this Judas swing there, right? Then we can say, yes, we got the Judas swing. And I was like, what will nullify that Judas swing and say, okay, manipulation is here? And she said, if we come back and take out that high right there, what did price do? Came back and took out that high. And what did it do for the rest of the day? Just hung out in this area. Oh my goodness. This stuff really works. Golly gee willigers. Somebody's charging you $19.95 a month for this. $19.95. Oh my goodness. Oh my goodness. This stuff really works, Batman. So, when we was talking about if price doesn't do something algorithmically that can give you the opportunity to say, hey, I'm going to back off because it looks like they're manipulating price. What can make them manipulate price? Oh, when I look at my economic calendar, I can see that we have CPI on Wednesday, right? Based off of the handy dandy cheat sheet that Tim showed us, CPI is one of those times of the month when price is like this is like important, like this gonna bring some volatility. People waiting on this. People ain't gonna be doing nothing real big in front of this CPI, in front of this FOMC, in front of this non-farm payroll, right? So it makes sense that we are now back in the middle of the range, right? Look at this, right? Price came back up just from right there, just from Friday. Price came back up to where? It came back up to equilibrium, right? It used the Asian and the London to get back to equilibrium. And then once it got back to equilibrium, seek and destroy, chop you up, seek and destroy, chop you up, do-do-do-do-do, do-do-do-do, 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 right? So you see there's an example in real price. It just happened today, right? Where price got to equilibrium, came into the New York morning session, gave us a Judas swing, but then it came right back and took out that high. And soon as price takes out that high, you say, hey, manipulation. I'm going to wait for more information, right? And so when this manipulation, like when they stop holding price in the range, then you can look and see and say, okay, right, we're just doing around here. And then once we get our CPI, right, if price wicks up like that and it comes back down, now you can say, okay, it's a Judas swing. Let's go down, right? If it, I drew that line kind of long, but do, right? Come up here, take out these highs, right? Take out these highs and then wick back down there. Then you can say, okay, let's go down to the low, right? Or if we come here and we wick down there, take off up there, right? Come up here and leave those highs, right? Then you want to see, do we break back down through this and then go to the low, or do we come back and respect this and go back toward the high, right? You just have to wait to let price see what you want to do. But right now, long as you're going from external to external, just sit on your hands. Just sit on your hands. All right, let's go down to like a 1 minute and look at the price. And then we're going to call it, because we've been on here a really long time. A really long time. It says that we have been on here for an hour and 53 minutes, so we're going to make this quick. I'm sorry for holding y'all so long. All right, so we're looking at the 1 minute candles. Okay. God dog it, Tim. All right, so looking at the 1 minute candles. We already looked at the Asian, so we'll come over here and look at the New York for the 1 minute time frame. So we'll come over here to 9:30. Mark out our 9:30. candle. Right. So this is our 9:30 candle there. Right. That's 9:30. And for those that be wanting to like highlight like your kill zones and stuff, there's a cool indicator called sessions on, it's called sessions on chart or something like that. Sessions on chart, right? It's called sessions on chart. It is made by Aurochs AIF, like Aurochs AIF, and I like it because you can come in and you can set the times for what you want. Like it's got like London session, New York session, Tokyo session, Sydney session, and you can pick which one you want to show. But what I like to do, right, I got times set in for, I got like 3 to 5 for London because that's the time I want to be trading. I got 9:30 to 11 for New York. That's the time I want to be trading. I got 7 to 9 for Asian. That's the time I want to be trading. That's all I'm showing. But what you can do, you can come in here and you can tailor this, right? Let's just say I want to show just like New York 9:30 to 11. When you turn it on, right? When you turn it on, see how it like highlights 9:30 to 11. So you can set this for whatever time you want to trade. And like just say I got this from 9:30 to 11, but I want to show the beginning of the kill zone, right? I want to show the beginning of this red part there. Just say the red part I want to trade there, but I want to show the beginning of the kill zone, so I can put 7:30 in here, put 7:30 to 9:30. Right, I could put 7:30 to 9:30 right there, right, and hit OK right there. Now, so I got 7:30 to 9:30, so I can see what happened, like during, like from 7:30 to 9:30. So I could be like, hey, look, this is, the time from 7:30 to 9:30, and this is the time I want to be trading. So I can look in there and be like, okay, we did this during the beginning of the kill zone, and now we're coming in here at 9:30, right? And if y'all remember when we was on a tape reading session, I was like, we're in an extreme premium, so I wouldn't be interested in buying this. It can keep going up all day without me, but I'm not interested in buying in a premium, right? And why did I say we was in a premium? Because looking at what price has done all the way from the opening, right? Remember, we opened up way over here, right? This is where we opened up at right here. And now by 9:30, price is here. This is where price is at 9:30. We're in an extreme premium right now. So I'm not interested in trying to buy right here, right? I would need it to pull back into a discount, right? In some type of discount for me to participate in the long. You see what I'm saying? And we got to pull back down here, right? We got to pull back down there in this range. Let's run a Fibonacci tool from when we opened up. Over here, this is the lowest point from when we opened up. Right, run the Fibonacci tool up there. Right, and if you notice here, right, I got a bunch of junk on the screen, so it's hard to see. Right, you see, we came back down into a discount, right, and we went back up, chopped people heads off, right? So price went up, came back down to a discount. It ain't really all the way on the bottom, right? Came back down into a slight discount, pushed back up, chopped people head off. Okay? Get it? Got it? Good. Right? So okay. All right, so now, so we open up at 9:30, Still in an extreme premium. Right, we open up at 9:30, still an extreme premium. We open up here at 606.75. Traded down into this BISI here at 9:25. Yep, traded down into this 9:25 BISI. Okay, that's a 1 minute BISI. Everything on this chart is going to be 1 minute, except for our higher time frame PD arrays that we already have on there from our top-down analysis, right? And then we pushed up into equilibrium. That's equilibrium right there, that black line. That's equilibrium of the range. Consolidated there at equilibrium, and this is the low of that 15-minute fair value gap. This is a 15-minute here. Right there. God dog it, I keep highlighting the 4 hour, but that right there, it ain't giving it to me. But the one I got highlighted here, that's the 15-minute. Where's my? What in the world? Oh. Where's my settings? Am I tripping? Right there. See, it say 15-minute right there. 15-minute SIBI right there that we traded up into. Right, and then we touch the inversion fair value gap. So we were right there consolidating at equilibrium. Right, we displaced up back to the weekly low of the inversion fair value gap, creating another BISI right here. If I said SIBI, I meant BISI. I'm sorry. Right, created another BISI right here. Right, we wick below it into the order block, but the bodies of the candles are respecting consequent encroachment of the BISI. Right, pushed up, took out the high. We came up here, took out that high, came up there, took out that high. Then we came back down one more time to the BISI, traded up to the high of the 4 hour fair value gap. The 4 hour fair value gap was the upper end draw on liquidity today, because we didn't have a swing high to draw to. So the draw was the high of the fair value gap. We made it to the anticipatory reactionary point, and then we displaced down. We displaced down, created a breaker here, created a breaker there. Okay, we traded and created a SIBI right here, traded back up to, we didn't make it back to the SIBI right there. So now we have a breakaway gap right there. This 1018 SIBI is now a breakaway gap. So now that we have, and when do we identify that as a breakaway gap? Here, once we create it and we trade back to it and we drop away from it there, now we're anticipating that be a breakaway gap, and we don't want to see price fill it, right? We want to see that either not get touched at all or not get filled. Okay, so once this 1019 candle close, this 1 minute BISI at 9:50 at the start of the macro time, this 1 minute BISI has now become an inversion fair value gap. Now, what's significant about this 9:50 BISI becoming an inversion fair value gap? When was this BISI created? Right, this is the 9:50 candle. What does 9:50 start? The 9:50 starts the macro, right? The 9:50 starts your macro. So from here, from 9:50 over to 1010, right? Over to 1010, that is your macro window. Right there. So from 9:50 to 1010, that is your macro window for the New York AM, right? So this is your macro window. Stuff that happens inside this window is of significance, importance, because this is the time when price is going to spool toward liquidity or an imbalance, right? So you see during this 9:50 window, 9:50 to 10:10 window, we were anticipating price to either take out the sell side, right, or spool to our destination at the top. Since price was bullish, we were anticipating it to hit the top of the fair value gap. That was the draw. But since price was engineering liquidity, it's always possible for it to come and take out the liquidity before hitting the draw. In this case, it hit the draw first, right? And then it came back down and took out the engineered liquidity. Now, when we came here and inverted this fair value gap, now you have an inversion fair value gap from a macro time, right? A specific time of day, right? Specific time of day. And then this next candle, where does it come? Back to consequent encroachment of that inversion fair value gap from the macro. This and letting us know this is a breakaway gap now. The next candle, where does it come to? Consequent encroachment of that macro inversion fair value gap, verifying that it's a breakaway gap. It creates a up close candle. The sell program has been initiated. Why? Because we took out buy side, came back, took out sell side, and now we are respecting premium PD arrays, meaning PD arrays above price. Respect the breaker, respect the inversion fair value gap, right? Create an up close candle, right? Once we create the up close candle, what does this next candle do? Come back up into the up close candle, respect it, push back down, closes below, right? Respect the up close candle. The sell program is intact, right? Come down, create another up close candle, break off, create a SIBI and an inversion fair value gap right there. Right, create that inversion fair value gap right there. Price trades back up into the SIBI, institutional order flow entry drill. Right, what is institutional order flow entry drill? When price pokes into the fair value gap and immediately leaves it. It doesn't even try to fill the fair value gap. Poke back into the fair value gap, institutional order flow entry drill. Drop away. Right, drop away. This candle right here pushes back up. How far up did it push? Tim, it traded up past that right there. If you look right here, where's the highest up close candle in this little, the highest wick in this little push up here? Right there. Traded right back to consequent encroachment of that wick. This candle hit consequent encroachment of the wick, dropped down. This candle here wicked up, touched consequent encroachment of that wick, dropped down. Boom. Right, came down below midnight, and then yada yada you. Once we got down there below midnight, then we started our reversal process. Right, took out the sell side, took out the sell side. Here, smart money reversal, and then boom, blasted back up. Got our breaking market structure and started to go back up to take out the buy side once again. And with that, that brings me to the end of this very, very, very long dinner discussion and price action recap. I hope that someone walks away from here tonight with something that helped them say, ha ha. Something that helped them say, ha ha. Ha ha. Hey, I appreciate y'all. Do anybody got anything for me? Gang, y'all got something for me? Thank you, Tim. This was good. You're welcome. Very, 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 very good. Michelle said she had to go at 9:04. Peace, Michelle. The Blackout David said, thanks a long time ago. You're welcome. I'll take the silence as a no. Nobody got nothing for me. I appreciate y'all for hanging out with me, man.
I got something on the text message on your phone.
Yeah. I just seen it on my watch. Is you a fool? That's all Baldeezy from that's how his hair used to look. Cookie Tosser, what kind of hairdo was that? Hey, man, that's it, man. I appreciate y'all for hanging out with me. Hopefully y'all got something out of it. If you didn't, I promise I'll try my best the next time to share something that helps you understand how to read price action just a little bit better. If y'all got something out of this, man, share this with somebody who you think will need this. Share this with somebody. I don't run around promoting my YouTube page to everybody. I don't buy no ads. I don't be trying to, on social media, trying to, yeah, we the number one. I don't be doing all that, man. If y'all know somebody who can benefit from this, share it for them, man. Share it with them. You know what I'm saying? He who has ears, let him hear. Hey, man, take advantage of the day while you can. Let your loved ones know that you love them, man. Take advantage. Ain't nobody promised tomorrow. Don't just say it. Don't just show it. Say it, show it, and confirm it. Open up the lines of communication so they can let you know how they need to accept love. If they desire words of affirmation, don't go buy them gifts. Right? If they desire gifts, don't give them physical touch. Speak their love language so that they can receive the love you're trying to give them. Open up lines of communication so everybody know what each other's love tank look like, man. Take advantage of the day. Ain't nobody promised tomorrow. Call your siblings. Call your mother. Call your father. If you blessed enough for your parents to still be here, call them and say, hey, mama, hey, dad, I was just thinking about you, man. Go see your mama. You know what I'm saying? Go take a trash out for her. Go take a lunch. Go do something with her. Hang out with her. Go in the other room and hug your spouse. Hug your kids. Kick the dog. Thump the cat. Tickle the gerbil. Whatever you got, man. Tell your loved ones that you love them today. Ain't nobody promised tomorrow. Appreciate y'all. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing they call price action. Hey, man, it's your boy. Aranya Grande. You see it behind my head? That's Big Spider if you don't hablo Espanol. Y'all be safe out here in these trading streets, man. I'm gone.